Hi, it's Adam Houston with the Market Club update for the week ending Friday the 20th of May. Well, actually, we had a pretty quiet week considering, but we did have some big moves. And the big move we saw last week was in gold. Gold was really the star performer with a gain of 1.2%. Let's go to that market first of all. We're here on our portfolio, and it's the weekend update. And let's look at gold. And the gold market was a plus 70. We click here and we'll bring a chart up and you'll get an idea of what we're looking at. So here it is, the weekly chart. You can go obviously weekly, daily, monthly, 60 minutes, 30 minutes, whatever you want. So we're looking at the weekly charts now. And one of the things I like to do as a trader, I like to look at the weekly charts because it tells you what the trend is and how people feel about this market for the week. And when a market closes up on the week like gold did, it's a very positive sign in my mind. We have a plus 70, as I said, right here, and we are seeing some sort of a little bit of a recovery. We had a buy signal at $14.99, so it's about $10, $11 profit in there right now, but it looks as though we may see a little bit more of a pop. Kind of a surprising move for a lot of traders last week in gold, as silver was really very dormant, and actually silver lost 0.93%, so gold was up 1.2 and silver was down. Quite the reverse of what we've seen just lately. So let's go back to our portfolio and let's take a look at silver, which has been very much in traders' minds. But look what's happening to silver. Very, very flat the last 3 weeks. We sort of hovered around this 34, 32, good support there, and we closed at 35.03 in the spot market. Now remember, Market Club is 24/7 spot prices for currencies and for precious metals. When I say 24/7, it's actually Saturday. You don't get real-time prices. Only late Sunday and the rest of the week during the week from around the world. So again, this market seems to have run its course on the downside. We had no follow-through, no real follow-through on here, and it's sort of just flattened out, much like gold. So this coming week should be very interesting to silver, because if we see this market see a little bit of a push up, maybe over 36 is going to get a little bit more momentum to test the 38 level and so on. So let's see how this market looks. But you've had a doji line here, another doji, and I think we're going to get some more action on the upside. That's my gut feeling in this market. So let's see how that plays out, particularly if gold holds the way it's going to hold. So let's go back to our portfolio manager. Let's take a look at oil. Oil, which is interesting, oil is a plus 80. That was another positive week. So we've actually had, even though this is a doji line, it was a second positive week for this market. As you know, had the big down week while I was away on vacation, of course, and then we had the positive week last week, the week before rather, and the positive week last week, the week just gone. So it looks as though for the most part, you've got very, very good support coming in this market around the 95 level, and I think that's something to look at. So let me just go back, just draw a couple of things on the screen here I want to share with you, and that is right around this level here. Very good support, and this is on the June contract, which is coming off the board very soon, but 95 seems to be good support for this market, and despite all the things that are happening, the drilling and everything else, it's still good support there. So I think we have to wean ourselves off this thought of very cheap energy coming down the pike anytime soon. It's just, I don't think it's going to happen. So the trend still remains positive. The monthly is positive. The weekly is mixed. So you should really be out of this market if you're a long, sort of intermediate term trader. Short-term traders could be long this market for a trading turn. That's all, just for a trading turn. But it looks to me like if we can take out last week's high, which is right around these levels here, around the 102 level, maybe 101.50, we could see a little bit more of a pop. But generally speaking, if we see a close down below 95, then obviously it's a different picture for this market. Let me clear this off the screen. And let's go back to our next market, which is going to be the S&P 500. And the S&P 500 actually has had 3 down weeks in a row. Not exactly a stellar performance. Well, a couple of things stand out to me in this market right now I want to share with you that may not have been brought to your attention. The first one is we had right here this particular week. This was This is called a dark cloud cover in Japanese terms. And it means the market was higher than the previous high and closed lower and more than 2/3 down the previous body of this candle. Dark cloud cover. What was even more disturbing was the fact that we closed lower the next week. This is this week too. And that confirmed this is a dark cloud cover. So again, we came down. We may see a little bit of a sort of sideways market early next week, but the reality is I expect the market to be under pressure on the get-go Monday morning. It's not even there. We're doing this Saturday, so I don't know what's going to happen, but the market closed very poorly, and it would look like we'll see some downside pressure on this market early on Monday. So the cool thing is we have our talking chart technology. We've talked about this before. You just click here. Oops, it's good.
This market has a negative 55% reading, indicating that it's moving into a trading range. We do not expect to see any big moves come out of this market in the very near term. It is time to move to the sidelines until a steady trend resumes for this market.
Okay, there you have it. That's the talking chart technology. It's on every single chart page. Every market we track, some 250,000 symbols, have that type of commentary, and it changes dynamically during the course of the day. That's what makes it so valuable to a trader. So let me clear everything off the screen. Let me go back to the portfolio and the portfolio manager, and let's look at the dollar index. We've talked about the dollar index. It was obviously saw a little bit of a pop on Friday, but the reality is it's still only 55%, plus 55%, which basically means it's in a trading range. This, I mean, look at how if you just draw a line here, it just sort of, it's in this range. It's not really dramatically moving out of it. So let me clear this off the screen. And let's look at how this market closed again. Let's look at how it closed for the week. It didn't close higher. It closed lower for the week. So Friday to Friday, it actually closed lower than last week, down just a meager 0.12%. However, that's a negative number. It's not a positive number, indicating that this rally from here maybe just rolling over like this to go back down. Again, the monthlies negative, have been from 81. It's currently trading at 75. The weeklies are positive. And this is a combination. When you have these, it basically spells neutral. And that's the key thing. You want to look into this thing and you want to say neutral on this market in the short term. Longer term, bearish, because the trend is your friend, and this is the long-term trend, the monthly trade trends. So let's take everything off the screen, clear it up, and let's go back to our portfolio manager, and let's look at the last market, which is the Ben Bernanke nightmare, and it's right here. This is the NASDAQ, excuse me, this is the Reuters Jefferies CRB Index. I always call it the CRB Index because it's been known for years and years and years as the CRB Index. Reuters Jefferies bought it and they renamed it for some strange reason to brand their own brand. But look what happened last week in this particular market. Again, this was not so you had the big down day here, the big down week, should say, not the down day, down week. It followed through the next week a little bit, and now we sort of had this little pop. Now we may be seeing a little bit more of a recovery here because we had a tremendous amount of liquidation in this market, and I think that's the important thing to look at. Hedge fund liquidation in all the commodity markets, which are reflected on this index. But this is Adam Hewison. We're looking at these markets every day at 1 o'clock. Join us right here to listen to our commentary and tell you what we're doing. Then join our big show on Thursday at 7 o'clock. I think you'll enjoy that one. But hey, every success in the marketplace, I'm Adam Hewison. Let's make some money.